Hey, what's going on, everybody? Welcome to the trading recap for Monday, February 25th here at Alpaca Trading. Didn't have many plays today, but just going to go over the trades that we did both on the option side as well as the swing side, and then learn a little bit about where we set the support and resistance lines, as well as the plays where you could have made money and where you could have entered and exited. So just a really quick overview of the market. Just looking at SPY right now, which of course is the ETF for the S&P 500. It's really reaching a point now of where it's becoming extremely overextended. That 281 mark that you see right there is the one everyone's watching here. So if we look at the fib retracement, the 78.6, this area right here, which it actually almost hit today at some point a little bit with just a wick here. It's hitting an area that has huge resistance from previous times here in December, in November, and in October. So it's if for any reason SPY is able to break through the 280.91 and continue an upwards momentum, that means that the stock market is going to continue to rally. But the overall consensus right now is that at some point SPY is going to have to consolidate and correct, maybe down to the 263.85 line. But all of this that you see here has been based on positive news. Trump just extended the deadline for the trade deal, and that's actually been received pretty positively by investors. So just something to think about. So let's go back to the first call that Kayla made this morning for PayPal. So PayPal is a pretty healthy stock right now. It hit an all-time high today of 97.3. Looking at the daily chart right here. Of course, since we're playing day trades here, we go into the 1-minute chart, and here you guys have basically PayPal hitting 97.3, which was the high of day, also called the HOD. So as you can see here, somewhere around here, when the stock established a clear support down here and a resistance, just with this area of consolidation here, Kayla then said get a call if it's confirms above 97.3, or get a put if it goes below 96.72. So here's how you could have played it. Just keeping in mind that the market is overextended at this point. We're hitting all-time highs based on what I told you about SPY. It's very, very difficult for something to rally extensively throughout the day. PayPal today ended up closing above Friday's closing price, so it gained almost a percentage point today, so 0.75%. So let's look here where we could have entered. As you can see, we would have played puts today on PayPal. 96.72 was the magic number. Again, we're looking for a confirmation. If you look here, we're looking for two green candles to confirm past this line. It did not happen here. So of course, you would not have entered here at this point. Yeah, we do have the EMAs, and it's going below the EMAs. But again, we first and foremost go by key support and resistance lines. That is what we first draw on the chart before looking at anything else. So it bounced off that key support, went back up, started trading sideways, and then, as you can see here, at around 10:38 or so, it kind of broke through with two red candles, and it came all the way back down to 96.54. So again, this was confirmation, but just remember that normally a stock will retest that area of support and come back up, and then as you can see, it did retest it, it went above it, but it created a lower high compared to the previous one right here. So again, it came back down, decided to retest that support level of 96.72, and at this point, right around here, it now started its downward trajectory. So let's look at what happened here. So let's just say that you would have entered right around here on this bearish engulfing candle at around 1128. Just remember that when it does a large push like this, the stock is obviously going to try to come back up. But as you can see, it got rejected by the 12 EMA, and it just continued trading down along the 6 EMA. As you can see here, this is the 200 SMA, and if you notice here, just a lot of consolidation. Like, this is what we call the war zone. There's just too many stuff happening here. But because you got the SMA, the 2 AMAs, and then you have the other one, the 50 and the 200 crossing here. So here, the stock kind of bounced back up, but here is, this area right here is where most people would have freaked out and sold, right? You enter at this candle, and then it kind of, goes down. You see this doji here, and which kind of indicates a reversal, and it did reverse. It did go above the 6 and the 12, but as you can see, it never ever touched the 96.72. It did not. It just clearly bounced off the 96.72. So again, like I've said in other videos, you have to give yourself some room to let the stock go against your favor in order for you to let it just kind of run its course and exhaust itself when it's on a downtrend. But here, clearly, it bounced off 96.72. It didn't even touch it though, and then it came back down again, went below the 200, and now again it's trading all the way down below the 12, below the 6, and it's now on a continuous downtrend. Yeah, there were areas right here where it kind of tried to push through, but as you can see, it bounced off the 50 pretty nicely as it continued going down, and then eventually, again, it tried it here, bounced off the 50, and then eventually it came above the 50 and above the 200, and then it ended up right here. So you could have basically exited. The point where you want to exit here, let me just zoom back real quick. The point where you wanted to exit was right around this area right here. This green bullish engulfing candle crossing over the 50 SMA. This would have been your exit point right here. Because again, it's not a tiny little kind of test like it's doing here. This is a giant green candle, and it's kind of like creating that 45-degree wave, so to speak, that we were talking about, and it's going from 96.24 all the way to 96.52 in a matter of just 4 or 5 minutes. So this is where I would have exited. If you would have entered around this candle right here and exited, let me change this real quick, and you would have exited just down here, you would have basically made about half a percentage point or 45 cents, which again, PayPal doesn't trade. It's not very volatile, but the point is that if you would have gone in here with 5 or 10 contracts, you would have made pretty good money. All right, so let's just go back real quick and look at if there's anything else that stands out. So now what we're looking for tomorrow is will PayPal go above 97.3. If it does, then we will consider putting calls. All right, that was basically the option call that was posted today. I'm going to go over some of our swing plays that was posted last night, and we'll talk about that as well. So I'll start with Eli, because Eli is something that we've been watching for a couple of days, or if not the past week. We talked about how on the daily chart, Eli is at a pretty serious resistance point right here, which is around the 17 area. And as you can see, right here today, Eli closed at exactly 17.17, which is that if you draw the line right here, if I set my line of resistance, we have 1 point here, another point here, and another point here. So the more times it touches, the stronger that resistance becomes. I'm going to put 17.18 there, but it's 17.17. And as you can see, there's a slight wick here, which if we go into the minute chart, the stock actually went up to 17.36, which just shows us that this stock wants to run. So again, it closed about a percentage point higher today than it did on Friday, which is good. I have a feeling that this is going to continue into the week. So this is again a stock that I would probably not necessarily have entered today, because like I said, when we enter a swing, we want to go back to the daily, and we want the actual daily candlestick to close above that 17.17 point that was announced. So again, it's getting there. It's trending above the 6, above the 12, and above the 50. And then we're obviously hoping that the next point of resistance will become the 200 SMA here at 1960, around 1964. So we're talking about a $2.50 move that we can see happening over the next couple of weeks. So again, Eli is definitely a stock that I'm watching, and it could be an awesome play for all of us. All right, here is another one that I want to talk about. This is a swing play that Mike talked about the other day. This is stamps.com. And what we're going to do with this is we're kind of going to go over a little bit more of an analysis of what happened here and why you could have made huge money today with this stock. And again, this was just so easy because just based on what it did last week after earnings and how much money it lost, there was just such a great opportunity to have entered this yesterday, or at least at the beginning of the day today, and made some serious profit just by buying. If you don't have that big of an account, just kind of, if you would have bought 5 stocks of this today, you would have made close to $100 because it had almost a 20% move. So let's talk about what happened. So this is stamps.com. On around, so 221, just a couple of days ago last week, it reported earnings, but the guidance was kind of disappointing because it announced that it was not going to be working exclusively with USPS.com anymore. So what happened? The stock literally dropped from $202 all the way down to 82.4. Okay, so I mean, this is pretty crazy. I mean, imagine owning a ton of shares here, waking up next morning and having lost almost nothing earlier than like noon, $120, $130 per stock. So when this happens, when there's such a huge gap, it gives us a huge opportunity, because the reason why it gapped so much is because people panic sold. I mean, it was just panic selling all across the board because of earnings. So because if Stamps.com is a pretty well-established company, if it hits a low of 82.4, is there a chance that it's going to come back, is going to continue coming down? Yes, but it would be pretty ridiculous for it to lose so much and then continue going down, because people want to invest, and people understand that this company is not going anywhere. Yeah, it had, not so good guidance, but the point is that the stock is just an incredible deal right now. So the moment that this happened, Mike announced that he was going to go on long on this, and again, If we look at the daily chart here, actually I'm going to do the 1 hour chart. Here we can look at that sell-off that it had, this giant, bearish engulfing candle, followed by more sell-off, and then next day it opened, and it eventually hit a low of 81.2. But now what you can see here is that today, the moment that the stock market, oh, and by the way, before I forget, the reason why what happened today did not happen on Friday is because nobody wants to hold on to a stock like this from a Friday to a Monday. It's just too risky. So the reason why there was just negative, it had a really, really bad day on Friday is because people were just selling and they didn't just want to hold the stock over the weekend. But we came in today and the bulls took over, and as you can see now, the stock literally opened down here, crossed over that 50 SMA, went on that nice 45-degree wave up that we talk about, staying above the 6 and the 12, and then now as well over the 200. So if you would have entered this morning on this candle right here, or even with the confirming of the crossing with the 200, you would have made let's see here. You would have made $11.84, or almost 14% in just this play. So imagine if you would have gone in this with an option contract. I mean, it's incredible, right? So just something to think about. I think stamps is going to continue going up. It's way undervalued at this point, and it has a huge room to grow over the next couple of months, and I think it will. Okay, let's go over to GE, which is GE gapped up huge today. So I made a call on this yesterday, I believe. There was a cup and handle on the daily chart that I did right over here. So as you can see, you have this cup right here, and then the handle with low volume confirmed down here, and as you can see, it's coming down, and then we were waiting for a breakout, and which it did right here, but it was also combined with positive news, because if you go to live news over here, GE to sell biopharma business to Danaher for $21 billion. So basically GE is selling one of their subsidiaries for $21 billion, which obviously increases their cash flow and the health of the company, and that made the stock kind of gap up like crazy between here and here. And if we go into the 3-minute chart, pre-market, GE went from about $10.14 all the way up to 12. Again, I feel like this was an exaggerated move, and as you can see, as the market opened, GE kind of started going down. So you could have literally, if you would have, purchased the stock somewhere around here, you could have sold it today for a nice profit, and then understanding what a stock will do when it gaps up so much, it's going to come down, and maybe you could have shorted it right around here. So GE is still something I want to watch for. As you can see, it only lost about a high of 1206 in pre-market, and then it ended up closing at 1082, which is about 60 cents higher than the previous day. A stock like GE usually does not move this much in a day. So again, this is something that you want to watch out and look for tomorrow and for the rest of the week. All right, last one is SPY. Kayla announced SPY today. Let me check real quick. I'm just going to take this off. So again, SPY is an ETF that I would only trade if I'm comfortable, just because it's just so volatile and it just goes all over the place. But let me see what she said today. Just have the numbers right here. Just give me 1 second. So SPY put if it breaks below 280.69, and SPY call if it breaks above 280.99. So I'm going to switch this over here, edit properties. Oh, that's, never mind. So let me just, sorry guys. Just going to draw the lines real quick. So 280.69. All right, so put if it breaks below 280.69, and then call if it breaks above 280.99. Okay, so again, this white line that you guys see right here is actually coming from the Fibonacci graph that I have up here. So just bear that in mind. The actual line of resistance and support is 280.99 and 280.69. So let's look at that, and also keep in mind that that 280, that Fibonacci retracement is that line that we want SPY to stay above for it to actually go on another rally. So as the market opened, we saw it pretty much trade sideways here for a little bit, break down support, break through support with two red candles, but it bounced off the 50, and then of course the 50. We're using the 50 as an additional area of support. So again, if you have a line of, if you have a key support, right, and it breaks through it, watch what's below. If there's an area of support right here, such as the 50, there may be a chance that it's not going to go through it. So just be careful when entering when it comes to these plays. So you can see it basically continued trading sideways, bounced off the 50, came a little bit below it, came back up, and then it just continued sort of trading sideways until we entered, you know, the so-called war zone right here, where the EMAs and the SMAs come together. But then eventually it broke below 280.69, and it just came down. So on a day like today, when SPY is hitting an all-time high for the past 45 days, we can expect to see a pullback. And as you can see, SPY just continued going down. So you could have entered here again around 280.69, and you could have written it all the way down using the 50 SMA as a resistance level, which, as you can see here, it held it beautifully all the way down. So if you would have entered that SPY at around, probably at this candle at around 12.27, you would have made, let's see, 12.27. You would have made about $1 on a put, which that's pretty good if you get a good contract on SPY. And who knows what's going to happen, but again, I think that we're hitting an all-time high right here. Or not an all-time high, but just that Fibonacci retracement line. And it's going to be really, really hard for it to go above 281.31 or again 280.91 and continue its uptrend. So it's, you never know what's going to happen, but honestly, SPY is due for a retracement. It's due for a pullback. It's been due for quite a while now. As you can see, since December 25th, it's just been on a constant uptrend. And I think that at some point it's going to have to, I'm not saying it's not going to continue up, but it's going to have to consolidate for a little bit, or at least do a healthy pullback, because the whole point of this, and the reason, it's not like I'm trying to be a downer with this. Everybody wants it to continue going up, but the reason why I want SPY to pull back down to 263 is because if it continues like this, and if it ever, let's say, so-called crashes, it's going to do it in such a aggressive way if it doesn't have a healthy pullback every now and then. Like, I see SPY going back to 263.85 and then shooting back up, right? But it needs to have that. It's just like, I just feel like SPY right now is just way too overextended. On the daily chart, you can see here, the RSI is, reaching, above 70. So just something to think about coming in to the next, for this week, that it may not continue going up that much. So that should give you an idea of how to plan your trades and also being careful about your position sizing. That is pretty much all I have for today. If you guys have any questions, feel free to ask in the chat room, and I hope everyone's doing well, and I will see you guys tomorrow.